We had the Fed out here. We've got this huge options activity, all that expiring today. So who knows what might happen on Monday? We're rolling into a new year. What is your take on sort of the underlying mechanisms of the stock market right now?
I continue to consistently say that inflation is a big problem. It's going to be a big problem in 2022. The Fed's going to even have to be more hawkish than we saw on Wednesday, which rates are going to go higher, which technology will continue to break down.
Yet how much of this is the Federal Reserve? Because the market acts on what it thinks will happen. So if it thinks we're going to get 3 rate hikes next year, it's theoretically moving now for that. Can stocks overall hold up in a rising rate environment in 2022?
I think parts of the stock market will hold up. I think small caps, I think financials, industrials, and materials, so more of the value play will hold up going into 2022. But anything that is speculative, anything that's overvalued, think about Rivian you just talked about, right? Rivian was trading at a market cap greater than Ford and General Motors, and it basically has no revenue. And that's the type of euphoria that we've been seeing all year in 21, which I've been consistently talking about. That can't continue. And then when you're faced with rising interest rates, when you're faced with inflation being problematic, and you think about what the Fed's been talking about, think about what the government's been talking about in terms of income inequality, the lower income household with inflation as high as it is suffering through this. So that's why you're going to see the Fed act more hawkish, which means rates are going to be higher, which is going to continue to be problematic for technology. And the technology sector is showing that right now.
You know, I hate to go back to, gosh, Phil, what is it, 1996, 1998? I'm getting old. Irrational exuberance. Remember those 2 words from the former Fed chair, Alan Greenspan? Do you think we are, in parts of the market, a little irrationally exuberant right now?
Brian, it's exactly that. And you think about it, it's right in front of our face that there's a bubble forming in technology, or has been forming for a while. There's tremendous euphoria with NFTs, with cryptocurrencies, with parts of the technology sector that got to extreme valuations. That's not investing, right? Like I look at investing, you think about Warren Buffett and Charlie Munger. They've doubled the market since they've been investing in good quality businesses, earning a dividend, good cash flows, and they've had tremendous success. And there's investors chasing these meme stocks, chasing these overhyped technology stocks, and it's problematic for investors. And that's why we're seeing the speculation off and it's boring stocks on.
Yeah, Phil. So if that's the case, and you obviously sound a little bit worried or concerned, nervous, whatever the word may be, where will be the good and potentially safe places to invest next year?
Yeah, so as interest rates rise, financials will be an outperformer. So my feeling is next year as we go into it, value will finally outperform growth longer than investors are anticipating. So I think you could do well in that particular area there. And as far as small caps have underperformed large caps. They're the cheapest in 2 decades. When interest rates rise, small caps tend to outperform. And 60% of the small cap index is industrials, materials, financials. So that particular area, I think, bode well. So think about in 2000, technology imploded and what did well going forward? Energy, industrials, materials, and I believe that's where we are today.